Testing. I hope all of you can hear me. If you can't hear me, probably you can just leave a message. All right, it's 7:30. I guess we will start our webinar tonight. So first of all, thank you. Thank you for joining us. Thank you for your time tonight to join us here. And also thank you for being punctual. Okay, so before we start, just like to do a very quick disclaimer. So whatever that I share tonight is only for knowledge sharing purpose, and it doesn't really constitute any buy or sell call. And what I'm going to cover tonight will be CFD. So this product in particular, the risk involved is more on the medium to high. Therefore, investors or traders that are interested to trade CFD are required to really fully understand the risk disclosure before you participate. Okay, so yeah, two things that I might need you guys to help me to download. The first one will be investing.com. Try to go to Google Play Store or Apple App Store if you are using Apple to download these two apps, because later on I will be using these two apps to teach you guys how to understand a company background in just 5 minutes. All right. So while I go through our company background, please help me to download investing.com and Bloomberg from your phone. Okay, so for those that just joined our webinar for the first time, our company, Phillip Futures, we are incorporated in October 1995, and we are a fully owned subsidiary of Phillip Capital. So our mother company is in Singapore, and our HQ is in Kuala Lumpur. Phillip Futures, we are a trading and clearing participants of Bursa Malaysia Derivative Berhad, which means we are also a PMSL license. So with this, we are a legal broker house to operate and to do business in Malaysia. Our company is the first broker in Malaysia to really provide an online trading platforms for both local and foreign products, which means if you are interested to trade US indexes or Malaysia KLTI or CPO, you may all trade it under one single platform. There is no need for you to log in and out with multiple platforms for you to trade, which is also one of the reasons why we are the top choices among the professional traders. If you are our clients, I would like to say a very big thank you. Without you, we won't be able to achieve this. So in 2018, we actually got 4 big awards from Bursa Malaysia, being the main one as we are the best overall derivative trading participant. So our mother company, Phillip Capital, we have offices around the globe with more than over 14 countries. With that, we don't just offer products in Malaysia, we also offer products from Hong Kong, Hang Seng Index, even from Singapore, from US, etc., etc. And just like our company name, Phillip Futures, our main focus all this while over the 10 years is always in futures. This is where our interests are, okay? And however, tonight what I'm going to cover is not about futures, but on the second product that we just introduced in 2019, okay, which is CFD, or the contract for difference. So our contract for difference is on Malaysia top 100 stocks, which I will do a very quick recap later on, okay, on this product. So why trade with our company? First, we offer a 24-hour support for both local and foreign products. So if you have problems even after the working hours, there is definitely someone there to help you if you dial in on our dealing line. Okay. Second, we offer the latest market news exclusively for our clients. Okay, on both local and foreign products. And for those that do not know where to start trading or how to start, feel free to approach us. We can guide you through to help you to pick something that is suitable for you from the wide range of products that we offer. For those that, like I mentioned earlier, if you have no idea how to start, you may talk to us to arrange for a one-to-one coaching session. Our coaching session are designed specifically for beginners, so don't worry if you have no ideas about futures or about CFD. We also organize seminars and webinars from time to time, basically every month, which is free for all all our clients, or even if you are not our clients, for everyone to join. Account opening is free of charge. Okay, there is no charges at all. However, we require you to sign in order for you to activate the account. That is the only requirement. Okay, that is all for about our company. And now I'll move into the main topic tonight, which is trading strategies for a bear market. This is a part 2, by the way. For those that missed out the part 1 last month or 2 weeks ago, we actually did a part 1. But that part 1 is mainly on the mechanism of what is a CFD, and what is, in particular, what is the CFD that is offered by our company, Phillip Futures. So if you missed that section, feel free to go to our YouTube. Okay, go to our YouTube channel. Just search Phillip Futures Sdn Bhd. Okay, you will find part 1 over there. Okay, from there you can understand better how does our Phillip CFD works. All right, and I'm not sure whether any of you are late for 5 to 10 minutes. Just quickly, let me just recap this one. If you haven't downloaded investing.com and Bloomberg from your phone, kindly do so, because later on I'll be trying to explain, to teach you guys how to understand a company background in just 5 minutes via these 2 apps. Okay. All right. Okay. Now let's just start our main topic tonight. So tonight I won't be going into details on how to trade a particular stocks, but I will be teaching you how to build your personal watch list. Okay. So watch list to me is really important. It's something that worth your time to monitor. All right, you don't want to put stocks that has no potential in your watch list. So today I'm going to teach you how to eliminate stocks that is not potential, okay, via these 4 tips. So before we start this, let me just do a very quick recap on what is CFD and how our CFD works. Okay, just bear with me for 5 minutes. So first, CFD is a derivative, it's just like futures. So basically, the traders are trying to participate in the price movement of the product without owning the product itself, okay? And all CFD are traded over the counter. For those that do not understand what is over the counter, you may watch our YouTube, our recorded YouTube on our recorded in the YouTube that we upload. Okay, we explain in details on what is a CFD, what is the over the counter. So for those, CFD is traded over the counter, meaning to say the agreement is between the buyer and seller, which is the traders, and the CFD provider. In this case, it's our company. And because of this, if you want to close your CFD trade, you must do it with the same CFD provider. All right. So that is, in brief, what is a CFD. So why does everyone trade? A lot of people, they always mention about trading CFD, but why? What is the reason? First, there is no exchange fee because exchange is not involved. Okay. Second, it allows investors to diversify their portfolio better because of the favorable margin. So unlike futures trading, in CFD trading, there is no expiry date on the product that you hold. Okay, as long as you have enough or sufficient maintenance margin in it, you can hold it as long as you want to. Next, CFD allows traders to do bi-directional trading, which means investors can hedge your portfolio. Okay, but for the moment, sorry to say that we do not have short selling yet, but our company is still working on it to introduce short selling on Bursa Top 100 stocks. So for those that are interested with CFD, may try to understand from us. So the moment we introduce short selling, you are ready to go. Okay, so for the CFD that we offer is on Bursa Malaysia Top 100 stocks. Okay, so the margin required for the top 30 stocks or the index linked stock, the blue chips, is only 10%. Okay, the margin for non-index stock, or we call the mid-cap, or those stocks that fall under the FM70 index, the margin required is 20%. Let's look at very quickly, we look at an example. All right, what are the hottest stocks that is in the market this week? Okay, definitely is a growth counter, Harta Lega or Top Growth. What are the margin required for you to buy? Say, assuming today Harta is trading at 8 ringgit. So how much you need to come up in order to own one lot of Harta? So you need, in a traditional broker account, you need at least a minimum of 8,000 ringgit in order for you to own one lot of 1,000 units of Harta. But today, if you are trying to trade CFD, Harta CFD via our CFD, Phillip CFD account, you only need to come up with 10%, okay? Because Harta is an index stocks, so the margin required is only 10%. So you only need to come up with 800 ringgit, okay? So for 800 ringgit, you can own one lot of or 1,000 units of Harta. So today, if assume Harta increase, the price move from 8 ringgit to 9 ringgit, all right? How much are you making in the traditional stock broking account? For this one, you are making 1,000 ringgit, but your investment will be 8,000. In our CFD, Phillip CFD, you are making 1,000 as well. So 1 ringgit equivalent to 1,000, which is totally identical in our Phillip CFD account, but your investment is only 800 ringgit, all right? So this is how a favorable margin is better for traders to use their capital better, more efficiently, all right? But at the same time, leverage magnify your profit, at the same time, it magnify your losses as well. So this is something that investors will need to take note, okay? So understand your risk and reward ratio before you trade. So just now I mentioned that the margin required for KLCI or index-linked stocks are 10%. So this in whatever that listed in this list are the stocks that you can trade with a 10% margin, all right? And whatever the list in over here, all right, is under the FN70 index. So the margin required to trade all these stocks is only 20%. Very good margin. Now, let's move on to the main topic, which is how to build your watch list. So first thing first, just like I mentioned, is to understand the overall industry cycle. This is tips number 1. Understand the overall industry cycle. So in general, there are only 4 economic cycles: the booming period, the recession period, the depression period, and the recovery period. So from booming to recession, in between this process, what are the stocks that we can focus as a trader? So when economy is really good, all right, economy is really good, usually, which means has been growing GDP. GDP definitely needs to keep growing. So growing GDP means what? Means our country export definitely needs to be good, because good export, high export means better GDP, okay? And when business is doing really well, they tend to borrow more money from the bank. So banking is definitely benefiting from a booming industry, okay? And for a government to continue to develop a country, they need to keep building infrastructures for the nation, okay? So they can't stop building infrastructure. So in this case, construction sector is definitely another sector that is going to benefit from a booming industry. Now, usually after the booming industry, we will enter into a recession to depression period. So in this period, what kind of companies we can focus on? First is the fast-moving consumer goods, which is something that we put in our stomach. So these are the things that we need regardless what economic recession it is right now. And the second group of companies that we can look at will be some cash-rich company, you know, with consistent earning and dividend payout over the 5 to 10 years, okay? This group of company is something that we can monitor to put in our watch list, all right? So in today's scenario, what causes this recession to depression is the COVID-19. So in this case, healthcare is definitely another industry that is going to benefit from recession to depression period. So yeah, we can put healthcare inside here as well. So usually after depression, there is definitely en route to a recovery. So in this en route to recovery, what industry is going to benefit, all right? Banking, and again, banking is definitely going to benefit. When businesses start to pick up, they tend to start to borrow money from the bank again, all right? So definitely banking is going to benefit. Second will be property and construction. So these are the industry that is going to benefit. Lastly will be recovery to booming. So in this period, when the indexes needs to push as high as possible to tell foreigner or to tell foreign countries that our economy is doing really well, index is usually one of the indicators. So blue chips definitely need to push up high to show other countries that our economy is doing well, okay? Banking is another sector because banking usually make up of blue chips. And lastly will be growth company. Usually when the economy is recovering, people tend to invest more in growth company. So growth stock is one of the sector. So now, after we have gone through the full economic cycle, we need to really identify which cycle are we in. Are we in, a lot of people saying that we are now on a V-shaped rebound. So are we actually in this depression to recovery, the road from depression to recovery, or we are actually still in the road from recession to depression? This is something that we need to find out. So from here, how do we find out? There's a method that we can find out which industry. So, but before that, let's look at tips number 2 first, which is industry breakdown. Like I mentioned, we break down all the industries into different sectors. From here, we can try to plug into this chart here based on the industry cycle. So you plug which industry is going to benefit from that cycle, you can put it in. Now, after we put all this industry breakdown in, now we need to verify whether our decision or our thought, is it correct? Is REITs really benefit from current industry? Is the banking really benefiting from current industry? Like I said, is here or is here? Where are we? If it is here, definitely banking is benefiting. If we are still here, then banking is actually not benefiting. How do we verify that? It's through industry trend analysis. So we can look at the trend of respective industry. And how can we identify a trend? There are usually the very basic way. First is through a moving average. Second, we identify the higher high and higher low, or lower high or lower low from here, or lower high. From here, we can draw a trend line, okay? So based on the trend line, we will know whether the trend is going up or going down. So for today, I'll be focusing on using moving average here, all right? So I'll be focusing on using moving average. What is a moving average and what is the purpose of a moving average? A lot of people is trying to use a technical indicator without really understand what does this technical indicator actually means. So moving average, even before technical analysis is invented, okay, even before that, way before that, moving average has already been used by people to use for time data analysis, has been used by people to do time data analysis. So this one, the main purpose of this time data analysis with moving average is to average out the price fluctuation, all right? So every day, price up, down, it helps people to average out the price, to make it smooth into a line so people can identify the trend. So this is the main purpose of a moving average. So in general, in technical analysis, there are two simple ways to use this moving average. The first one we call the simple moving average. This first one is really simple. How you calculate? If we are using a 10 days moving average, how do you calculate? You just take the closing price of the stock for the past 10 days, you add it all up, you divide by 10, and you get your moving average line, your simple moving average. Now, the second one will be the exponential moving average. A lot of people just tell you MA, EMA, but you do not know what are the different. So EMA, basically, it means that the weightage that it takes up to calculate that moving average line on the 10-day is higher than the weightage of the 9-day or the 8 days. So the closer the date, the higher the weightage, which is the exponential part. This is why the word exponential. So the weightage is higher. When the weightage on the 10-day is higher, which means the moving average line is actually a lot more sensitive than the simple moving average. So because it reflects the recent price a lot better, okay? Simple, everything is just the same, but exponential is more sensitive, so it reflects the recent pricing movement, the price fluctuation even better. So now, just now we talk about the first number one, understand. This one we done it. We break down our industry, all right, and we say we want to understand the trend of a particular industry. And today I'm going to use moving average to elaborate this. So first, industry trend. What are industry trends? Industry trends are the indexes of that particular sector. So the first one we will look at today will be finance index. If you use the 10 days EMA, 50 days EMA, how do you look at finance index? Do you think finance index is the sector that we can trade in today's economic cycle? Do you think if you buy a banking stock today, if you even by just looking at this index, do you think you are able to profit from it? The index itself using 10 days EMA has already shown you it's a bit hard for you to profit. Why? You see the 10 days EMA is moving flat and the candlestick is just moving to and fro of this 10 days EMA. It's weak. The trend itself is weak. So for me, I will try to avoid the finance index if I want to trade a certain company. Finance index company, I will put it out of my watch list for now. All right. So if you look at these two highlighted area, so this first one will be the first hole here. When there is a hole, we always say that when there is a gap, it needs to close the gaps. Okay, so it's just like we have a hole in our pocket, we need to man it. All right, so if you look at it, it's definitely weak. The 50 EMA is still pointing downwards. It's a very weak index to trade. Second, we look at property index. If you look at property index, yes, it's stronger than finance, but it's still weak. How? It's still below 50 EMA, and 50 EMA has just recently wanting to go flat, but in general, it's still pointing downwards. And the candlestick, if you look at it, is still moving just slightly above the 10 days EMA. So it still, to me, is a weak trend, but definitely stronger than the finance index. Okay, next, let's look at something stronger. Industrial product index. For those that don't know what is an industrial product index is for companies that manufacture something. Okay, like for example, Petronas Chemical, they manufacture industrial products, which is like a chemical. For plastic company like Scientex, those are all industrial products company. So these are the index for those kind of company. If you look at it, is way stronger. You see the 10 days EMA is strongly pointing upwards, where the candlestick is even moving above the 50 EMA. So for this one, and if you look at this particular candle here, it's actually a very strong momentum breakout candle above the 50 EMA. So to me, yes, I would trade these companies that falls under industrial product. I'm willing to trade it. Now, let's look at another one, technology sector. If you look at technology, the 50, the 10 EMA are all pointing up, and even it is above the 200 days EMA. This orange line belongs to 200 days. So definitely it's telling you that the index is relatively strong. So these companies under this index is definitely one of the top choice that traders can monitor to trade, to find opportunities in it, because it gives you a very strong trend. In trading, trend is the most important thing. So try to trade with the trend. Now, there are so many other index that due to time constraint, I won't be able to cover one by one, but there are still construction index, which is companies like Gamuda, consumer index, okay, companies like consumer product like Heineken, Carlsberg. Energy index are usually referred to the oil and gas company, okay. So healthcare are definitely one of the strongest, which is like growth industry, falls under this index. Plantation refer to plantation companies. REIT, Telco, Macy's, Axiata, these are the index under, are the companies that make up of Telco and Media index. Transportation are companies like Westport, correct? Westport, GDAX, these are the transportation and logistic companies fall under this index. And lastly will be the utilities index. These are companies like YTL Power, like Tenaga, which deal with utilities. So there are still so many other index. I will give it to you as your homework. Try to go through it to identify the trend. Which index has the right trend, has the uptrend, has a strong trend for you to trade. Then only pick stocks that is in that particular index. So after you have identified which index to trade, now let's move on to the next one, which is this one is just a quick one. Like I mentioned earlier, for those that have not downloaded investing.com and Bloomberg, please do so, and I will be trying to teach you how to identify company background in 5 minutes. So after we have identified the trend of a particular industry, so we know what stocks we want to trade in that industry. Now, the same way you go to a company, you still need to identify the trend. Not every single stock in a technology sector is performing really well. So same way, identify the trend. Just now we covered how to identify the trend. You can use moving average, you can use higher high, higher low, you can even zoom into a smaller time frame, say 4 hours, 1 hour, for you to look at the trend even clearer, right? In advance maybe. So understand the trend, look at the trend. So always buy an uptrend stock. If you want to profit, always buy an uptrend stock. Don't try to buy a downtrend stock where the trend is very weak. Now, let's move on into tips number 3, which is to understand a company background in just 5 minutes. All right. So we covered we understand the cycle, we understand the trend, which company to trade. From there, the company that we want to trade next will be the particular company with an uptrend. So we identify the trend, identify what industry we want to trade. Next, we will be looking at company background. So this one, first thing first, we understand what is the company doing. Okay. Second, we try to at least the company have profit and revenue growth for the past 3 to 5 years. Okay. So from Bloomberg, it basically summarize everything from you for you. You can see whether the company has revenue and profit growth every year. Does the company have earning per share growth? Bloomberg actually did all the forecasts for you, so you just need to look at it. Third will be look at the cash flow for operating. If you are a businessman, you should know that net profit doesn't really equivalent to cash flow. If you close a deal from a customer today, does it really mean that the customer will pay you? Everyone is purchasing something on credit nowadays, which means you might deliver your stock to the customer, but the customer might not really pay you back the money. So in this case, cash flow from operating needs to be positive. This is particularly important to me. So always make sure that the bottom line, at least they have positive cash flow. And lastly is to trade the quarter report announcement date. Investing.com actually summarize it out. What are the date that the company is going to announce? Okay. So from here, these 2 apps is summarize everything from you. We are not accountant, so we do not need to go through very in-depth if you are only doing trading. Unless you are talking about fundamental investing, then probably you need to do extra homework. But if we are talking about trading, we just need to do a very quick due diligence on it. Okay, company background. Let's go to Bloomberg and just probably we can search Pentamaster. Just go to Bloomberg. All right, we go to Bloomberg. You type in Pentamaster. So from here, you should be able to get, okay, you click Pentamaster. Under the overview, you scroll down a bit, there is a company info. If you scroll down a bit, there is company info here. So from there, you are able to have a rough idea. Is this the company in the right industry for you to trade? Okay, next, we look at revenue and net profit growth. So you just scroll right, you go to financials. You should be able to see financials. Okay, so under this is overview, you go right, financials here. From here, it summarized, you go to annual. There is quarterly and there is annually. So you click annually. You click here, it tells you 4 years. The black one refers to the revenue and the blue one refers to the profit. So from here, it tells you whether the company has a profit and revenue growth for the past 3 to 5 years. Okay, so yes, if it hit your requirement, you give it a tick. Yes. Next, we look at this one. After we look at revenue and net profit, we need to look at whether the company has earning per share growth. You go to key stats. Okay, just right beside the financial, you scroll right again. You go to key stats. From the key stats, you should be able to see this thing called estimated earning per share. So Bloomberg did all the hard work for us. it even did an estimation. So from here, as long as the estimated figure, I would say, as long as it is higher than the earning per share, this is their current earning per share. As long as the estimated earning per share is higher than the earning per share, I would say yes, the company has earning per share growth. So revenue, profit, and earning per share, they are all on the uptrend. Okay. Next, we look at cash flow from operating. So for this one, you go to financial again. Just go back to financial. You scroll down slightly. You scroll down until the thing where you see cash flow here. Okay. You go to cash flow. You go to cash flow. Then there is quarterly and there is annually. You click annually. You click this one. After you click that, there is this black line, operating. This refers to operating cash flow. So as long as the black line is moving above the zero, this is the zero. So as long as it is moving above the zero, to me is good enough. Okay, to me is good enough. At least the company is making money, is receiving money, okay, back from their debtors. So yeah, so this is understand the company cash flow. Now, lastly, we will look at investing.com. Let's go to investing.com. Okay, the app investing.com. Right now, we will use CIMB as an example. There is a search button on the corner, right top corner. You type in CIMB, CIMB Group Holdings Bhd. You click it. You click it, and then you go to earnings. Scroll right. You scroll right to the very end bit. You scroll. Just keep scroll this until you see the word earning. You click on it. You see earnings. You click on it. You can scroll here. So you scroll right to the earnings. You click on it, and you scroll down. You scroll down. You should be able to see a release date here. So over here, it tells you what are the dates that the company is expecting to release their quarter report. Sometimes it might not be 100% saying it's on 20th of May, but it will be minus or plus somewhere here. Okay, around it's maybe between 15 to 25, in between this date. So if the company that you are buying, you are not very confident that the company is going to be reporting a very strong report, then probably we can try to avoid trading this counter first, because sometimes company, after they announce, there is a volatility in the share price. Unless you are very positive and very confident that this company, okay, is going to do really good, it's going to beat the forecast, then yeah, go for it. Okay, or else we may try to avoid first. Okay, this thing is released every 3 months. Okay, it's released every 3 months. So definitely these 10 days you may try to avoid. So understand where it is, when it is. Okay, next, after we have go through the company background, I believe we have already eliminated those company that is loss making, those company that is not in the trend. Okay, the industry that is weak, we have already eliminated those. So I believe you should be able to build your portfolio or your watch list, not portfolio. You should be able to build your watch list right now. So next we will try to, because right now is the bear market. So to me, I will be using KLCI index to judge when to enter. Where is the bottom? Although we won't be able to 100% know where is the bottom. Nobody knows, okay? Only God knows. So in this case, we can do an estimation using historical data. And also remember, the stocks that falls under our Phillip CFD, they are all blue chips and also the mid cap. So to me, it's quite related to the KLCI index. So we can use this index to do an estimation. This can be done through two methods. So the first method will be we try to understand the historical data. We try to look at what happens in the history to understand and then to predict what is going to happen in current bear market. Okay, this is method number one. So method number two, after we have done an estimation, we based on historical data, then we can identify the bottom reversal pattern. We can identify the bottom reversal pattern. Okay, now method number one, which is through historical data and technical analysis. This is a monthly chart from 1987 year to 2020. So this is a monthly chart. So if you look at if you look at what happened in 1998, if you look at that, the index forms a double top here, and then it breaks the neckline. So from here, the peak to the neckline is a drop of 500 points. Moment it breaks, there's a drop of another 500 points. So at this area is somewhere that, not asking you to enter straight away at this point, but it's somewhere that we as a trader can take note. Okay, so 500 points here drop, another 500 points. So this is somewhere that we can take note to find opportunities. At least we have a guideline. It serves as a guideline. Let's see what happened in 2008. So in this, from peak to the neckline, it breaks the neckline. A drop of 385 points. So there is a drop of 385 points. All right. So for this one, it doesn't quite reach this bottom. So that is why I say we always need to use method 1 and method 2 together. So we will look at these keys in method 2 later on. Now, this is the current bear market. So what happened here is the double top here. And where is the neckline? The neckline is somewhere here. We so-called the support turn resistance. Okay, this is the support turn resistance here. So a break of 300 points, which means this is the level that we as a trader can start to monitor. We as a trader, we can start to monitor because this is the potential bottom, a potential bottom. So now we have identified this. Next, we put a 2 trend line over. We draw a trend line. Same chart, we just put a trend line over. You can see these are the support line. Okay, these are the support line. So here you won't be able to go in because why? Because it probably is not even the bottom yet. Can continue to drop. We never know. So when we want to enter a trade, we try to find, can be higher. The price can be higher, but don't worry about higher price because why? What is the most important in trading? Trend. Trend is the most important. When it doesn't show a strong trend based on, it can be based on higher high, higher low. It can be based on the moving average line. As long as it doesn't show you the uptrend or the trend of moving up, don't trade first. Although it can be more expensive, but at least the trend is there. You see? That is why. Now, for this one, it doesn't quite touch the line and then it starts to rebound and it doesn't even hit the 385 points area. So for this one, we will use method number 2 to find entry signal together. Same goes to the 1998 crisis. Okay. Now, for 2020, this level here, 300 points, is somewhere here. So this is the level that we can monitor. But where is the risk? It's somewhere at this trend line. So there is another 200 points. So moment it breaks, if you are doing trading, moment it breaks this line, you may try to exit first. It breaks down, it goes back up. You may try to monitor chances to enter using MA line or higher high, higher low on smaller time frame. These are all methods to judge a high trend. But if it breaks below this level, probably you can exit and wait at somewhere here as a trader. Okay, you can wait at somewhere here. At least you have a guideline where can be the bottom for the index. Okay, now after we have identified the potential bottom, just now we identified the potential bottom. After we identify that, we want to find an entry signal. So what is an entry signal? Which means a bottom reversal pattern. 3 very basic and also very frequently used bottom reversal pattern. The first one will be a double bottom. The second will be the inverted head and shoulder. The third will be higher high and higher low reversal. These are the really most basic reversal pattern. Now, let's look at what happened in 1998. If you do remember, you must use method 1 and method 2 together. Okay, so if you look at the trend line, you draw it up, you should know that this line here is already above it breaks above the support. It shoot up. So this will be resistance turn support right now. So resistance turn support, and remember, method number 2 is a higher low, higher high reversal. So it's very obvious that this area here is somewhere that you see this is the support line already. So this is an area that traders can enter to benefit from a bigger bullish momentum. Okay, so this is where trader can enter in 1998. Now, let's look at what happened in 2008. You see, although it doesn't really quite touch the 385 points, and it doesn't even touch the trend line, okay? But with method number 2, which is to identify the bottom reversal, we are able to catch the opportunity as well. If you look at this, what kind of pattern is this? This is called a double bottom. This is called a double bottom reversal. So moment it breaks above this, we call net line, okay? Moment it breaks above is where, and it shows you it breaks above this higher than this one, which means that this is already a certified, a confirmed double bottom. Maybe when it is here, it's not quite a double bottom yet, but the moment it breaks above higher than this, which means this whole pattern here is a verified, is a confirmed double bottom, which means if you enter here, yes, the price can be higher than the rock bottom, but the trend is strong, where you can benefit from a bigger bullish momentum. Same goes to 2020. You may just wait for a very strong reversal pattern, then you can go full force in, okay, to trade. But of course, there are so many ways to judge a trend. Like I shared earlier, moving average, you may use like 10 days, 8 days to really judge earlier. So if you enter with a 10 days moving average, you need to exceed based on the 10 days average, moving average. If it breaks below the 10 days moving average and it doesn't go back up in the next 3 days, probably it's telling you that the trend is weak. Then as a trader, what we don't want the most is risk, okay? So even if probably it will still go up, but to me as a trader, you might just want to exit first, all right, to re-enter if it goes back up above the 10 days moving average. So what indicator you use to enter is definitely the indicator that you use to exit the market. All right. So yeah, this is how I will use KLCI index based on historical data and bottom reversal to do an estimation. Now, is our Phillip CFD really right for you? First, what is your risk appetite? Are you a trader with higher risk appetite? If yes, then our Phillip CFD, the leverage that we offer is definitely for you. If you are an intraday trader, or if you are a short-term trader using heavily on trade heavily based on technical analysis, our CFD is definitely for you as well. Why? Because our margin is really good. Blue chips. How do you want to profit from blue chips if you are trading with 100% of the margin? But with our Phillip CFD account, 10% is all you need, and the profit and loss is fully identical to the broker account with your stockbroking account. Lastly will be your investment objective. Are you trying to just wanting to speculate the market? Just want to speculate that 10 cents, 20 cents, and you exit? If yes, the leverage that we offer definitely allows you to do that. Okay, so yeah, how to use our benefit? What are the benefits to trade with us? First will be the favorable margin, 10% on the blue chips. That is all you need to pay, and 20% on the FM70 index. And second, like I said, we don't have it right now, but in future, we will introduce short selling on the top 100 stocks as well. Okay, so this allows you to even hedge your portfolio with just a little bit of money. You are allowed to hedge your portfolio. Okay, so in our previous seminar, we have received lots of questions. There are repeated questions being asked over and over again. So today I try to summarize it out, and I will just go through it one more time. And also just for your information that there is a QR code right here. If you can just scan with your phone, you can let us know that you are interested. You can talk to us because there is a form inside that you can just fill out and let us know that you are interested with our Phillip CFD, and we will contact you personally. And even for if you are wondering what stocks you can trade with us, we have a list inside this QR code as well. You scan it, you are able to download the list of the stocks that is available to trade based on the 10% or 20% margin. It's all listed in the list. So scan the QR code to find out what stocks you can trade and talk to us. Okay. So first question that the attendees asked me last in my webinar 2 weeks ago, what are the costs to open a CFD account? for your information, account opening is all free of charge. We don't charge you anything to open a CFD account, but we require you to fund in to activate your account, which means you need to put money in, and that money is 100% used for your personal trading. We don't charge you anything to open an account with us. Second, if you are already our client, you are trading futures with us, can you trade CFD? Yes, you can, but you need to talk to us to find out more. Okay, so scan this QR code. If you are already our client, but you want to know your eligibility, you can scan the QR code and talk to us, or probably just send a text to the dealer that always keep in touch with you. The third question, what are the minimum size to trade with our Phillip CFD? The minimum trading size is based on the stocks that you want to trade. So for example, just now I use Hata for an example. So if the stock price is at, assuming Hata today is closing at 9 ringgit, okay? If Hata is closing at 9 ringgit, what are the minimum trade size? Which means with 900 ringgit, you can own one lot, okay? So it depends on the stocks that you want to trade. There is no minimum trade size. If you want to trade a stocks that worth 1 ringgit, how much you need to come out if the margin is 20%? 200 ringgit is what you need to trade. Okay, so it depends on what stocks you are trading at what price. The fourth question, what are the stocks available to trade? Like I said, at the moment, we only allow investors to trade top 100 stocks on Bursa Malaysia, which are all the stocks that falls under FN70 and blue chips. Scan to find out more. The fifth question, what will happen if the unrealized losses breach the initial margin? What this means is that in the case of overloss, just for your information, our company, we have a overloss policy, which means by 50%, if the money in your account is less than 50% of the margin required, we will give you a call. We will inform you that your account is currently low equity. You may choose to top up or to monitor. Okay, so moment it hits that 20%, our risk team will liquidate your position. So it's quite, I won't say it won't happen, but it's quite unlikely that you will have an overloss account, because we have a policy of forced liquidation at 20%. Okay, this is something that traders need to take note. And next will be dividend. A lot of people has concern on dividend, because stocks trading is different from futures. Stocks, we are trading the company, and company usually they are distributing dividends, and dividend will affect the share price. Every time the company adds the dividend, the price will be deducted from the share price. So a lot of traders, they actually have concern on this. For your information, our Phillip CFD allows investors to fully receive the dividend 100%. We don't charge you anything on the dividend. So if the company is announcing a dividend of 10 cents, that 100 ringgit, moment our company receive it, we will return it to you. Okay, so yes, this dividend, you are entitled for it. And lastly, there's this very good question. Warrant is a leverage product. Our Phillip CFD is also a leverage product, but what are the difference between these two products? So if you ask me, if you have been monitoring warrants for some time now, you should know that the price of the warrant doesn't really identical or move in the same way as the price of the mother stock. Okay, it's not always identical. Mother stock can be going up, but warrant can be dropping as well. And warrant is subject to time decay, okay, which means there is an expiry date to it. But our Phillip CFD, remember I said earlier, there is no expiry date to it. As long as you have sufficient margin in it, you can hold it as long as you want to. Okay, so basically these are the frequently asked questions. So yeah, now we move on to the Q&A session. So if you have more questions, you can ask me. But before that, just to let all of you know that our company, we are the first one now to introduce this online trading account. So now is the movement control period still. If you are inconvenient to come to our office and you want to open a futures trading account, you may scan this QR code. Okay, you scan this QR code and you fill in your information. Then we will be able to help you to proceed with your account without physically coming to our office. So okay, so if you register, if you find out this online trading, if you try to register this online trading account, you may use this code WBWL for us to trade you better. Okay, so now let's move on to the Q&A section. I'll leave it here for those that want to keep a record of the link. You may scan and keep it in your phone. Okay, now let's look at some Q&A. Okay. Is the volume, first question, is the volume for CFD market big? Okay, so for all the stocks that we offer, the price you trade is fully identical to the price that is in the exchange. So the volume really depends on the stock that you are trading. If the stock is active in the stockbroking account, then definitely the volume is going to be active here. Why? Because when you place a trade with us, okay, you place a buy trade via our Phillip CFD account, what our company do here is we will go and place a trade at the exchange. At the same time, you come out with that 10%, our company will come out with that 90% of the money. We go and buy that one lot of Harta Lega from the exchange. So moment we match, your side will match as well. So if the liquidity that of the stocks that you want to trade is already low in the real stock market, then definitely the volume is going to be small as well. Because what we offer here is a direct market access. So what this means is that whatever you see in the exchange, the price, the volume in your stockbroking account will be fully identical to what you are seeing in our Phillip CFD account. All right. So now let's look at the second question. What is the brokerage for trading with our Phillip CFD? So just to let all of you know, the brokerage to trade with us will be 0.5% based on the market value of the stocks, okay? 0.5% or 60 ringgit, whichever is higher. And we are also charging an interest of 5.5% per annum, okay? Based on everyday closing price of the stocks. So if you want to understand how our Phillip CFD works, I really recommend you to just go through our part 1. Everything is really, really clear inside. It's really clear. We explain it really clearly in our part 1 to tell you what are the costs to associate, how to calculate your profit and loss, and how the whole thing works. What other corporate exercise, what will happen to your stock, our Phillip the stock CFD. So we explain it really clearly in our part 1. So you may go to our YouTube channel, you search our company Phillip Futures Sdn Bhd channel, and then you are able to find part 1. Okay, or if you want to know more, you can contact us to find out any overnight charges for CFD. Yes, we charge you interest for holding overnight of 5.5%. So for this 5.5%, if you really want to say, is it really expensive for 5.5? I would say it's quite reasonable, to be honest, because the leverage that our company is offering you is 10 times of leverage. Okay, in usual margin account, the maximum, if you put a collateral or fixed deposit in, the maximum they can give you is 2.5 times leverage. But for our Phillip CFD, we don't request you to put in any collateral. As long as you have sufficient margin, we allow you to trade up to 10 times leverage and 5 times leverage for mid-cap company. Okay. A lot of people is asking about transaction. Like I say, if you want to know the details, you may either contact us or go listen to our part 1. Let's see, is there any, can we short? Okay, so like I said, short selling, we have not introduced short selling yet, but we will try to introduce it as soon as possible. Okay, we will try to introduce it as soon as possible. So basically that is it for our Q&A. Now let's move on. Just to let all of you know that CME has introduced this micro contract since last year. So this micro contract allows you to give you access to micro S&P, micro Dow Jones, micro Nasdaq, micro Gold, and even micro Russell. All these indexes with a very affordable leverage. So the margin required for you to trade all these US indexes is around 1,000 to 2,000 USD. So compared to previously, if you want to trade US indexes, you need to come out at least a 5-digit kind of initial margin just for you to start to trade. But today, everything you can start to trade with just 4-digit, and the trading hours is almost 24 hours, which means if you are working in the morning, you are still available to trade at night. Okay, so why we strongly encourage people to trade these micro contracts? First, very affordable margin. Second, it allows traders to really trade up to almost 24 hours, which means you can arrange your own time. And third will be is bi-directional, which means you can profit from both bull and bear market. And lastly, unlike, if I'm not sure whether you are aware of the FM70 index, all right, it's a smaller contract, but the volume or the liquidity is not that great. But with this micro contract, the volume are really great. The bid-ask spread is basically just one tick away. So it's some really great product to trade if you are a trader. Okay, so next will be just to let all of you know that we have a Facebook page called Phillip Futures. Please go to your Facebook, search Phillip Futures and give us a like, and we usually will update our promotions. If we have any promotions, market news, we will try to update it from time to time on a daily basis. And also we have a Telegram. If you are a statistic kind of guy, you want to read like what are the production, palm oil production, what are the, you know, etc., all the statistics, you can just follow us at Telegram, and we will usually publish it there. And like I said just now, if you want to know what is our CFD, we did a very short 3-minute clip. You may go to YouTube, you search Phillip Futures, what is CFD? This video should pop up, and you may just spend 3 minutes to go through it to understand what is our Phillip CFD. We try to minimize to help you to understand better. But if you want to know the full details, you might need to watch my part one 2 weeks ago. We upload it in this channel as well. Okay, and these are the contacts of our branches. You may email or call us to find out more if you are interested to trade with us, be it CFD or be it futures. You may contact us. So I think that is all for today. Thank you for your time. Thank you for joining me, and have a great night. Yeah, I think that's all. Thank you.